Let's touch a bit on the PPP program, if we may, Brian. Those statistics that you were kind enough to share with me a few hours ago, 98% of your PPP loans to companies fewer than 100 employees, 76% fewer than 10 employees. There's been a lot of criticism of this program. Do people need to take a step back, look at those figures and realize that in general, it's sort of working, it's sort of fair?
Yeah, so let me just talk about where we are today, because this has been a heck of a week in the history of the PPP, from the reopening Monday morning to where we are here as we close the fourth week of the program. And so if you look at where Bank of America is now, the SBA working posture this week started off a little tough, but has improved dramatically. They processed a lot of activity. They've done a good job of getting their system up so you can send more through, and also the batch process you heard about. But we now have 231,000 plus SBA numbers today. That's 231,000 businesses of the profile you talked about. 98% less than 100 employees, 75 or 6% less than 10 employees have promissory notes going out to them. We'll send out over the next 48 hours probably 180,000 promissory notes to those businesses, totaling $15–20 billion. And so the program worked this week well. The numbers were staggering. That's 231,000 pieces of work that went on to get through all of the process, and that's all going out. And the notes are out. We got about 50,000 notes are out already. The rest of them will go out over the next 48 hours. Those customers, all they have to do is execute the note, execute the documents, get it back to us, and money goes in their account relatively quickly.
Brian, I know you can't touch on individual clients, but clearly there have been some cases where, maybe because of the client's size, its strength of balance sheet, or its access to other forms of cash, where they've tapped the PPP program, but perhaps were less deserving of those funds than other smaller businesses. Were there any examples for you where people met the written down criteria, but you guys looked at it and thought, this client isn't really as deserving as some might be, but you had to fund them either way because the terms were the terms? I
think through the frequently asked question guidance of Treasury, you've seen people take action, customers take action. It's not our responsibility, obviously, it's the customer's responsibility, and so you've seen that. But I think you get into the ins and outs of all that, you're missing the broad point that we have 231,000 businesses for $24 billion, so an average of $100,000 a business less, and another 37,000 we have ready to go through the SBA. They're going through $1,500, $1,600 an hour. For another couple $2 billion. It is a broad-based program. It's going where Congress wanted it. The changes to the program that were made to eliminate the types of things you're talking about, you've seen the stories out in the public domain about it, but the reality is this is going exactly where it was supposed to go, to very small businesses in big numbers across the country.
Do you think the DOJ's opened some proceedings to investigate whether there was any fraud in the process? Do you think it is inevitable there will have been some fraud?
I'd let those investigations bear out and see what customers and clients doing. It's premature on all that.
The PPP program, Brian, clearly aimed at helping the smallest clients, and big companies, particularly with some of the Fed actions, have been able to tap the bond markets. The Fed's Main Street lending program designed to address the sort of middle ground of that. Do you think that has been well designed, such that all the companies out there that need funding will ultimately be able to get that? And does it give you confidence that the level of write-downs you had to make in Q1 earnings will be the peak in Q1?
Well, let's just go back and think about when we're talking about the economy broadly, Wolf, to start. What you're going to see now as it plays out over the next several weeks here is the impact of these stimulus plans all hitting at once. So you're having the PPP program. You've seen some of my peers and ourselves talk about how much is going out the door relatively quickly. You have the unemployment insurance benefits that are now being distributed, even though the horrible situation with unemployment at the level it's at. You have the stimulus checks, of which hundreds and millions have gone out, and we have a major part in distributing those. So all that is hitting, and at the same time, you've seen what's the other thing the Fed has done is the Fed has stabilized through their standby, which is their role, and they've done a great job going really asset class by asset class in the market to stabilize. Treasuries, mortgage-backed securities, munis, and they've gone down those asset classes, and you've seen the spreads come in the regular way activity go up, which has allowed for tremendous issuance of investment-grade debt, the biggest month in history is April, and it was only the next biggest was March. So that activity has put a lot of liquidity in the market, a lot of activity, which has helped move a lot of the loan demand to the most stable long-term holders of that. And so you put all that together, where haven't they reached yet? Well, that's what Main Street has set up next. And so the teams from all the companies have been working with the Fed, and they've got a term sheet. And the good news is there. How it will be used? Frankly, the best news is it's never used, which means the economic recovery is such that we don't have to use it at all. But having it there for that asset class, which is hard to get to, is the right thing to do, and they built the program, and we'll see it play out over the next few months as to what actually happens.